Hey guys, we'll give the folks a little bit of time to get in. All right. Okay. I'm going to go through this this trade from day one and all the processes, and what I'm going to share is the cash side of it, because the trade was a little uneven. And and I've been getting asked to share how, in fact, the whole process works and how it's profited. How the profit works in these trades. Okay, so because it's a little complicated when you start adjusting them and trying to figure out, what's debit, what's credit, and what you get in the end. And so that's what I'm going to go through in detail on this. All right. And it's pretty quick, but, hopefully you'll have some questions. Hey, Judy. Okay. All right. So the first day we put this trade on, and I'm going to use levels in the market. And I've gone through even today, because today was actually the last day that we closed out the final position. I know some of you still have the put credit spread, and now that this market's taking a tumble, I'm worried about that. Okay, so this is the first day. So I put on a 30-20 30-15 put spread, right? And it was 10 position, 10 contracts basically, and I received a credit of $400. Okay. Sure, Glenn, no problem. And then I also put on 30, and the reason I put on a small amount was because I wanted to get more volatility, in the market, and get better premiums and get a good position in. And obviously this one was a good position. I got 40 cents on a 30-20, 30-15 spread, where the market was at 3,100. No, actually it wasn't. It was 30.79, 30.98 at that point. That was the range for the 13th. Okay, so now let's do the math, right? So I collected $1,200 and I collected $400. Sorry about that thing there. And so basically now the running total is $1,600, right? I've got $1,600 of credit that I received for this trade, right? Okay, the next day I put on a 30-30 because the market basically wasn't doing anything. It just, you can see the range there was very, very similar. And I put on a 30-30. I went up a little bit, 30-30, 30-25, 35, just so I wouldn't be so uneven on the trade. Okay, so now I've got 20 put credit spreads, and I've got 30 call credit spreads. So I received another credit of $350. And this is actually how the channels calculate the monthly and the 7 DTE. And somebody asked me, hey, you closed the trade, but your profit went down. That's exactly what happens, because when I put on the trade, I'm receiving a credit. When I'm closing the trade, I give it back, right? It's a debit. And so that's why you see the calculations kind of kludgy, but in the end, right, when the trade is done, like this afternoon, if I don't put on another one, and I'm probably going to put on another one today, that's how it comes out. Okay. All right. So now I've got that. And so the 15th was a pretty busy day because on that day was when the market shot up. Okay. And I was left with 20 credit spreads as opposed to 30, and I couldn't do anything about it at that point. I wasn't going to put another one on, but ultimately I had to, because we ended up having to roll the position. And so this is exactly what happened in the roll, right? And so I wanted to move that baby up, so I moved it up 20 points higher, right? And it cost me 50 cents debit to put on that trade. So it cost me $2,000 to that I had to give back to put on that trade. On the other hand, right, at the same time, I bought back the original And this was throughout the day, okay? Because I rolled the trade early, I think, and then I actually closed both of my put credit spreads on the same day. One in the morning and one in the afternoon, because the market had shot up. And so by the time that the second call put credit spread, got very profitable, and I was able to close each for 10 on the same day. So that's how much the market was moving up on that day. Okay. Then at the same time, I went ahead. Oops, this is wrong. I used the filler there. Okay. So this is actually 30, right? Because I sold now 30 call credit spreads. Let me fix that real quick. Hold on one second. I'm going to fix this just so we have it on record here. This is actually 30. Okay. And then present, and here we go. Boom, boom. Hey, that was a quick fix, right? Okay, there it is. So I actually put on 30 now, put credit spreads, and so I received a credit of $2,000. So all in all, I closed the two positions out that I had for $100 each. That's $200, and then the putting on, the rolling of the call credit spread and the putting on of the put credit spread, it was debited $2,000 and it was credited $2,000. Okay, so it was a wash, and of course this doesn't include commissions. And so now I have to debit my current credit by $200 because I took off those positions. So I'm at $1,750, right? Okay. Then what happened was the next day, or no, not the next day, but actually 4 days later, over the weekend, I was able to, we were able to close out. And you remember yesterday, right? As the market went up, I closed out the 3070, 3065. And the reason I closed it out, because this news was pending out there. And I didn't want to be stuck in a put position when the market was extremely high, extended, and ready for this kind of thing to happen, what's happening today, right? So I wanted to get out of that trade, and I wanted the opportunity to be able to put on another trade when we get this volatility like it is, because this is golden, right? This kind of volatility is golden for 70T and monthlies, and I'll be putting on both. Maybe not today, but definitely soon. Okay, so now, so we were able to get out of this trade, and it cost $600 because I have 30 spreads, and there were 20 cents each. That's what we got it right at the top yesterday, right at the top. And after that, the market started going down again. Okay. So now I gave back $600 because I took a debit for that trade, right? So now I'm at $1,150, right? Minus commissions. Today, what happened was, it was during the zero DTE trade, that I got 10 cents for the 30, right? So that's a $300 debit. So I ended up, the total trade profit was $850. Okay. So now you can extrapolate that back for whatever you used, and whatever your debits and credits were, while you adjusted this trade, so that you can figure this out. So what was this? It was a trade that could have ended up bad, right? But with adjusting the trade and managing it, I ended up with a $150 gain over a period of the 13th to the 20th, over 7 days, actually. Okay. So that's how these work, and they work really, really well. And the goal, the most important part is actually understanding and knowing how to adjust these trades. That's really the most important part of this trade. Okay. Any questions? It looks complicated here, on this map, but once you start going through the mechanics of this, and you should all learn how to do it with each of your brokers, whatever broker you have, because they're all different. With TOS, I put it in the phone, and it just gives me an automatic, positioning of rolling the trade. And then I can just manipulate it on the phone, and it's very, very simple. I actually have a video of me doing that on the phone, of manipulating the trade, and it's in the YouTube channel. Okay. So any questions about the process, Judy, I know you had a question about, what premiums I use, etc. And so let me add a little bit on the roll. Okay. So normally I'll go for and you've heard me say in the webinar and in another place, wow, this market's really, really going down. We're at 30.94 already. You've heard me say, 7 to 10 delta on the call side, 10 to 12 delta on the put side, right? Well, when you do a roll, I'm really looking at trying to get it for a little bit of a debit or a little bit of a credit or break even. And so the deltas are off on those. They're higher. They're much higher than they normally would be if you put on a new trade. Okay. And that's the risk here of doing that. Let me show Judy. Okay. Hey, Judy. The minimum credit that I go for on these is typically 30 cents. I don't want to go lower than 30 cents. And I've gone up to, well, we went up to 50 cents here on this one. And 50 cents is usually the max because you're really going into some risk there, right? When you're putting on that kind of premium. And so this 50 premium here, I think that the delta was around 18 to 20, I think, on this one. So it's really like twice as much as I normally would. And I know the delta for this one was higher as well. Okay. And that's why, when I in the course, I talk about the profit targets should be lower for a trade that's been rolled. And just because of that, okay, just because it's more risk, and the chances are that you're going to have to roll that trade again because of the higher deltas over and over again, and I just wanted to make sure that I rolling these things is like the worst, right? It's just the worst, and it's not because you're losing money or anything. It's just the complication of it, of doing it, and then pushing it out a couple of days. You want the trade to be over with, but you have to manage it. And so when you roll these, I set a profit target to 20% to 50% instead of the 50% to 80% that you normally get. And that way it helps you get out of the trade faster. Yes, you get a lower profit on it, but you're profitable. You move on to another trade and you're not taking a loss. Since April, I have not taken a loss on any of these 7 DTE trades. Because I've adjusted, and it just works. So anyway, so that's it. That's the picture, right, of this trade and how it works, and hopefully you can understand the process a little bit better, and how the cash flow works as well in the trade. Okay. Any questions? All right. All right, guys, that's all I had. That was fast. That's about 15 minutes. So hopefully this was good. And just to let you know, if you're in the room in the SPX credit spread traders room, that one's going to be archived on Friday when we stop new member subscriptions for a few months. And so I'm going to archive the Facebook group, and then open up a new one when we do the next open subscription period. For people who want to ask questions and want to know what's going on. We got about over 200 people in the Facebook group, and we did quite a bit of subscribers coming in, new subscribers. And so for those of you who are new, welcome, and hopefully you're enjoying things. And so. So anyway, that's all I had, and I don't see any more questions. So I'm going to leave you guys be and see where we get to in this market. All right. Thanks a lot. Have a good day, and we'll see you in the room if you're there.